I'm gonna be honest with you, I don't understand day trading. Like, I get it in theory. I think the goal is to neuroticism max and lose your mind each time you see a candlestick, click up or down 2 or 3 pixels. Holding periods above 12 seconds are frowned upon. Obviously, I'm simplifying. A little bit. This piece on Tasty Trade made me think about my long position in Uber and whether there is a risk of the company losing its drivers because they all became millionaires by day trading 0DTE options. But let's be real, day trading will probably lead to more Uber drivers, not less.
Look at my P&L. Oh my. Fuck! I just blew a fucking brain. Oh my. Fuck! Fuck! Fuck!
I've always believed that the point of investing was to make money over the long term, although I have to admit that long term is a load-bearing phrase for me. But I don't define myself as a day trader. I just don't think I've got the chops. I think you have to be a very exceptional sort of person to day trade effectively. The research backs me up on this, as you'll see. Like you, I enjoy torturing myself by consuming financial media, and lately I've noticed that 0 days to expiration option trading is becoming more popular. I've been seeing people in the investing space encouraging this fun and exciting new way to permanently destroy your capital, and I have some thoughts. For example, Tasty Trade has put out quite a bit of content around 0DTE, which is fine. I'm not going to criticize them or say anything bad about them for that. Tom Sosnoff says that his viewers expressed interest in the research around 0 days to expiration option trading, and I don't doubt that's true. I don't want to come off as a hater, but I just have to point out the obvious conflict of interest here, because as an investment brokerage, Tasty makes money when you, the retail trader, well, trades. So if they can convince you to become a neurotic day trader, they can make more money off of you, as you inevitably become one of the 98% of day traders to gamble away their student loans while being glued to what Tesla's candlestick is doing on a millisecond by millisecond basis.
106!
Oh, that happened so fast, man.
Hold on, Mr. Julian, my dad gonna kill me, oh my gosh.
Your dad? Why would your dad care, man?
But it's his money, man. I borrow his. He gave me the money to go to freaking school.
What?
Again, I'm not trying to single out Tasty here. After all, getting people to compulsively transact is literally Robinhood's entire business model. It's just that this article on their website was too funny for me to ignore. Look at them try to explain how 0DTE options is definitely not gambling. Like, it's all over this article. Come on, I mean, do I have to say it? Oh, trading 0DTE provides me with fast feedback on what I did wrong, does it? I don't need my brokerage to tell me what I did wrong. I knew what I did wrong the moment I tried to trade 0DTE options. Why anyone would willingly subject themselves to the mental anguish of staring down an uncooperative candlestick is beyond me. And if you've seen the research on day trading, whether it's stocks, options, or God forbid Forex, yeah. It's not great. I came across an interesting article on currentmarketvaluation.com, which nicely summarized 6 different studies about day trading. It came to the conclusion you might expect. Day trading bad.
I borrow his. He gave me the money to go to freaking school.
I found this article interesting, so I wanted to better understand the research. So in a desperate act of avoidance for the many, many other things I should be doing, I proceeded to read them all. Except this one, which was behind a paywall. I'm not paying $50 to read boring academic research. As a result of my rigorous study, I've reached the zen of the stocks investor, and I've seen the light. Either that or I'm hallucinating. If you appreciate me pouring over hundreds of pages of mind-numbing statistics in order to make a YouTube video telling you what you probably already know, then please subscribe to the channel and consider giving me $3 a month on Patreon so I can pay for the printer ink and Red Bull I need to live my best life. I heard that just 1% of YouTube channels ever get monetized, and so far, it looks like Cult of the Almighty Dollar is well on its way, so I wanted to thank all my viewers and subscribers. You guys' feedback has been encouraging, and you make it all worthwhile. Anyway, if you are someone who's a day trader, or wants to be one, allow me to offer some food for thought before you decide to join the dark side. After all, you should at least know the odds of what you're getting into. The studies I looked at tell us the same thing, which is that retail investors by and large are terrible at day trading, and almost all of them lose money. As we'll see, those that actually make money are sophisticated traders, not retail gambling addicts whose investing strategy consists of get the Lambo. Something like 98 or 99% of day traders would be better off putting their money in a broad market index and forgetting they own it. Except you, obviously. You will absolutely crush it. And you should definitely try trading. Did I say gambling? Unfortunately, the advent of high-frequency trading firms, combined with the average trader's lack of education or discipline, means that their $1,000 account is probably just another pocket for institutional investors to pick. As the machinery of capitalism churns on, forever striving for more, the small money degens, brave and foolish enough to engage in risky speculation, are inevitably the victims of smart traders who know what they're doing. It's like a reverse Robin Hood scheme, where the rich steal from the dumb. Here's the reality. It's extremely unlikely that a day trader will outperform a market-weighted index, or even have any positive returns at all. I'll stop shy of calling those who sell day trading courses outright scammers, because I don't want that kind of heat. There may be some out there who know what they're doing and genuinely want to share their knowledge, but I think we can all agree that there's a lot of crackpots out there. I think that's a fair statement. Anyway, the research shows that the odds of making day trading your full-time job are similar to the odds of getting drafted to the NBA. Some people do day trade profitably and even earn a living from it, but you've got to have something special to make that happen, as we'll see. Let's talk about the research. The first paper is a bit older, so we'll touch on it just briefly. It examines the performance of individual investors in the stock market, sampling 66,465 investors' trading records from 1991 to 1997, and concludes that day traders who actively tried to pick stocks underperformed more passive investors. That shouldn't surprise anyone. The day traders in the study tended to lean towards smaller, more volatile stocks. There was also a less noticeable bias toward value stocks, by which I mean companies with high price-to-book ratios, probably because they're cheaper for gambling-addicted degenerates to get into on a per-share basis, probably because they have shitty growth prospects and will therefore provide shitty returns. This should be sounding familiar. Anyway, here's how the researchers put it. After accounting for the fact that the average household tilts its common stock investments toward small value stocks with high market risk, the underperformance average is 31 basis points per month, or 3.7% annually. The researchers also note that day traders hold on to losers too long and sell winners too soon. If I'm not mistaken, I think you're supposed to do the opposite. As someone who trades probably more than 40 times a year, this checks out. However, my holding periods are usually the 15 to 90 day window, so I wouldn't exactly say I'm glued to my screen the way a day trader is. Losing money should not be a high effort endeavor. One thing I want to point out is that this research was done before Nancy Pelosi started buying Nvidia, so if your portfolio was overweight in tech like mine was earlier this year, you basically stomped on the gains made by the S&P 500, while day traders were out here trying to scalp 3 cents on a trade or whatever. You have to remember that this was the 90s, when barriers to entry for day trading were a little bit higher, so you know things are about to get a lot worse. The next study tried to explain what distinguishes between successful day traders and unsuccessful ones. It was done for the years 1992 through 2006 using data from the Taiwan Stock Exchange. On average, there were 450,000 individual traders during each year, half of which traded in amounts larger than $20,000. Let's talk about the winners before we get to the fun stuff. The researchers concluded that most successful traders in Taiwan were just lucky. However, a very small group of them were skilled and able to earn consistent, predictably high returns. The top 500, or 0.1% of day traders, were able to earn returns of 37.9 basis points per day. They tended to place aggressive orders in anticipation of price moves around earnings and were able to react quickly to new information. They were willing to take short positions and generally concentrated on just a few stocks. What I found interesting about this study is that it found that among the day traders who actually made profit, they seemed to be more aggressive, which is something that had the opposite effect on those who didn't know what they were doing, which is the majority of traders. Remember, less than 1% of day traders were able to profit consistently. This fun little chart here groups the day traders according to how aggressive their trades were. While those traders that were skilled and aggressive made money, the overall trend does not reflect that. And the results are pretty self-explanatory. As a whole, the more aggressive a trader was, the more money they lost. In any given year, only about 19% beat the market. That's 1 in 5 if you're keeping score. However, only 4,000 people, less than 1% of the day traders, were able to profit consistently. As I mentioned before, the top 500 were able to generate a juicy 37.9 basis points per day. They were probably highly skilled professionals because their consistent profitability was higher than what random luck would allow for. And that's pretty much where the good news ends. I did some boy math using the data from the study, and you can plainly see that it's not a pretty picture. Over 98% of day traders worked really hard only to end up bringing shame to their families' names. In a slightly encouraging note, while day traders overwhelmingly lost their asses, the data did show that highly active day traders outperformed occasional day traders. But this somewhat contradicts the findings of a later study, Day Trading for a Living, which we'll talk about later. That study basically tried to just focus on new traders and found that its population of traders were just as awful at trading after a year or two as they were when they started. To recap the winners, the research in this study found that the galaxy brains who were consistently profitable tended to trade earnings announcements focusing on just a few stocks, and they reacted more quickly to public information than unsuccessful traders. From this, we can conclude that in order to be successful at day trading, you need to be glued to your computer so that you can click the right buttons fast enough in the event the sales manager for a company you're invested in is found passed out naked in a Motel 6 somewhere. So if you thrive in a fast-paced environment and enjoy gooning with multiple monitors, day trading might be right for you. But remember, those that were effective at day trading were a minuscule portion of the total population, who were probably career professionals with great connections and sophisticated trading tools, whereas the overwhelming majority of the day traders lost their asses. Not only that, but they did even worse than what random luck would predict. While these findings are not reassuring to the investing public, they are extremely funny. And since a certain brokerage has taken the bold step to democratize financial losses, you can bet that things have probably gotten worse since this paper was published. I'll finish our discussion on this research by sharing some of the serious shade thrown by the researchers. On average, individual investors have perverse security selection abilities. They buy stocks that earn subpar returns and sell stocks that earn strong returns. Using the word perverse, that was a choice. Woof. Learning Fast or Slow is another interesting study. It's brought to us by the same group as the previous one and uses the same trading data. This time our friends were trying to understand what motivates day traders to keep doing it. What compels these people to continue day trading when they're so clearly not very good at it? Around 1% of the adult Taiwanese population day traded in any average month, and the average trader traded 43 days out of the year. Which I'm just going to come out and say it doesn't even seem like that many trades. I may have a problem. The aggregate net returns for all day traders combined as a whole was negative for every single year studied. Guys, look at this chart. Has it ever been more jover? Profitable day traders had a 96.4% chance to day trade again in the following 12 months, whereas unprofitable ones had a 95.3% chance to trade again, which means that the trader's performance had a negligible effect on their future trading behavior, at least for that first year. It obviously tapers off a little afterwards, so what you're left with are only the most hardened gambling addicted degenerates. I won't spend too much time on this study since it's more about determining what motivates people, as if we don't already know the answer to that one. What motivates them is the same thing that motivates most of us, a magical confluence of greed and ignorance. And inevitably we wind up behind the waste disposal unit of everyone's favorite restaurant. In aggregate, day trading is a losing proposition. Day trading is an industry that consistently and reliably loses money. It's difficult to understand how such an industry survives. For people to knowingly day trade, most must either be overconfident about their prospects of success or derive non-financial utility from the activity and knowingly suffer losses as a result. Day traders may trade for non-financial motivations, including entertainment, a taste for gambling, and the desire to impress others. Profound words. They're basically saying that some of us are just built different, and that we don't mind losing money if it means we get the pleasure of sharing our losses on Wall Street bets. I suppose it's possible that some day traders are seeking community, and a great way to find it is by bonding over a shared devotion to destroying your meager capital by trading 0 DTE options and buying out-of-the-money calls on meme stocks. There is camaraderie in mutual suffering. Or maybe it's something worse. Maybe it's some sort of humiliation fetish. The paper also says that while noobs realize day traders lose money, they're also probably influenced by stories of those that make it, which circulate in non-representative proportions. Basically, they get radicalized into day trading by survivorship bias. Something else I wanted to point out. This paper lists day trader losses as a percentage of Taiwan's GDP, which gives us an idea of the scale of the degeneracy among day traders. It's also objectively hilarious. I've actually never seen statistics like this one before. I think at this stage, the researchers were just having fun dunking on their guinea pigs. Just a beautiful presentation of how the rich steal from the dumb. Chef's kiss. Marx might have called this a redistribution of capital in the wrong direction, as working people willingly gamble away their meager resources to capital owners. The beauty of the stock market is that it gives us the ability to view ourselves as shareholders for owning 1/10,000,000th of a company's shares.
I own one share of Planet Kajigger, so I'm entitled to some answers.
When in reality, we have more in common with our comrades at Wendy's. And now for my favorite study. And by favorite, I mean because it was only 9 pages long. Day Trading for a Living was published in 2020, and unlike Barber's Taiwan studies, which commingled sophisticated traders with the general population, this study attempts to exclude those people. So this research may provide a more realistic glimpse into what a normie can expect if they decide to start day trading. The study covered 19,646 individual investors who began day trading in 2013 through 2015. Out of these, 1,551 were what the researchers called persistent day traders. Out of this population of unfortunate souls, just 47 actually made a profit. That's 3% of the persistent day traders and 0.24% of the total population. What cracks me up about this study is that there are so few profitable traders that you can't even try to look at behavioral patterns among the winners because the sample size is not even big enough to be statistically significant. Let's look at our 47 rock stars who didn't end up behind the Wendy's dumpster. As you can see, the majority of these people didn't even make enough money to meet the Brazilian minimum wage of about $16 per day. According to the scatter plot, just 3 people were close to or above the $300 per day net profit. 3 people. That's 0.02% of the total population of 19,646 day traders. Assuming you trade every single one of the 252 trading days per year, earning $300 per day, like the 3 gigachads from the study, that would net you a profit of about $75,600 per year. Not bad, but you have to ask yourself if it's worth fighting those odds for you to become a day trader. Unfortunately, the study doesn't say whether or not these people supplemented their income by selling day trading courses on YouTube. Anyway, if you factor in the cheap vodka and hard drugs you'll need to keep yourself sane during this process, you're probably looking at a net loss anyway. But if you enjoy the idea of being glued to your computer and bleeding from the eyeballs as you pray to the market gods to please for the love of God make the line go up, and if research and evidence aren't enough to scare you off, then day trading may be for you. I don't want to come off as a hater, so I suppose that it is within the realm of possibility that you are in the less than 1% of active day traders that can actually make enough money to live off. I suppose anything is possible, but all the studies we've talked about are clear. You're probably not even in the top 3% represented on the scatter plot. In fact, it's far more likely that you're way off the grid. Way off over here in La La Land with me. Another hilarious finding of this study was that the performance of the most active traders didn't appear to improve over time. Like I said earlier, this contradicts the findings of the Taiwan study, but maybe that's because the study focused exclusively on noobs. I'll end our discussion of this study with a quote from the researchers, which I've edited for brevity. The probability of an individual exhibiting a profit decrease with the number of days he or she trades. The pattern is contrary to what self-selection and learning by doing would suggest. Patterns like this are usually found in gambling activities such as roulette, where the proportion of successful players also decreases with the number of rounds played. There's another study that deals with forex trading that I won't go over here. That's another sweaty rabbit hole of rank desperation and degenerate gambling that honestly deserves its own video. Anyway, the message from all these studies is clear. It's probably not possible for most of us to day trade for a living, contrary to what the brokerages and course sellers on YouTube and TikTok claim. There's a lot of sussy influencers out there, and I'm trying to be one of the good ones and warn you about day trading and other activities that are bad for your financial well-being, at least until a sports betting platform offers me $1 million sponsorship. I'm just kidding, of course. You know that we're all about getting this bread here at Cult of the Almighty Dollar, but I have standards. I honestly find it much less degrading to beg you to give me $3 a month on Patreon than take money from an actual literal gambling platform. I mean, it's already bad enough that I'm a Robin Hood stan, and it's not because they're paying me. I'm just an actual dumbass who enjoys their platform. Anyway, let's say you've made up your mind about day trading, and you want to do it. We'll be generous and say that you would have been among the 47 traders who made money in the Brazil study. Besides, you genuinely think you've got the skills and passion for it, and you think you'd enjoy the lifestyle. Let's do the math using some of the assumptions from our friend Fernando. We'll assume you're one of the lucky ones who earns the Brazilian minimum wage, which comes to about $4,000 per year. Assuming you trade every trading day of the year, your monthly income would be about $336 per month. A one-bedroom apartment outside of a city center might cost around 1,000 Brazilian reals, which comes to about 165 US dollars. So that's half your monthly income gone right there. Factor in a few bad trades, and even if you could do this consistently, it doesn't exactly guarantee that you won't have to take up residence behind the dumpster at everyone's favorite restaurant. Those who made money experienced quite a bit of volatility in their earnings, so your income won't exactly be consistent. Even if you are one of the lucky ones, the only way day trading can be viable is if you also manage to hold down a part-time job. But day trading requires all your attention as you neuroticism max while gooning at your 20 monitors. This was always going to be a difficult task, and no doubt it's gotten even harder as high-frequency trading firms have become more sophisticated. Try competing with the Terminator by swiping around on your phone with your free hand while your other hand is elbow deep in French fry oil, and tell me how that works out for you. You really have to ask yourself if the learning curve and time commitment of day trading is worth it, especially when there are so many other viable and less stressful ways for you to lose money. Or if you actually want to make money, sell puts on Google with 3 to 4 weeks till expiration. That's what I've been doing up until now, and I have yet to declare bankruptcy. Or buy an index fund while the market hits a new personal record every 5 minutes, because we all know stocks only go up forever. Just don't forget to leave a burnt offering to Jerome Powell. We can't afford for the market gods to take their foot off the gas pedal, even for a moment, or the whole system collapses. I hope I've given you something to think about if you're one of the people on the verge of getting radicalized into day trading zero DTE options. Let me know your thoughts on day trading or if you have any experience with it, and please drop a like and sub if you enjoyed the video. The algo is beginning to notice Cult of the Almighty Dollar, and I'd love to continue my work spreading the good word of shareholder capitalism. As always, thanks for tuning in, and I will see you in the next one. Bye for now.